Good Friday morning, everyone. We're on the floor of the New York Stock Exchange with Jim Cramer to talk about the markets. Jim, the S&P 500 is flat, but the 10-year hitting 3%, helping the bank stocks.
Helping the banks, which have been terrible. I do see a lot of bifurcation today. You see some of the big international stocks almost as if our international exporters, Boeing, 3M, that people must think there was going to be some sort of deal with China. I'm very suspicious of that. The 10-year finally gets JP Morgan off the schneid. Watch Goldman Sachs. There are a lot of people who like the changes. Goldman Sachs Action Alerts name, I certainly like the changes. Why? Because you need to get away from trading. I think that the volatility that has been Goldman's hallmark, I'm not saying that there won't be any more volatility, but I'm saying you don't need as many people as you used to. And I think that one of the things that Goldman has to recognize is that technology can take the place of a lot of people, sadly, because I absolutely, I worked at Goldman, don't want to see that, but the investment bank guy's taking over. I see 3M's now reversed, nothing new there.
Yeah, Jim, you mentioned China. Of course, David Tepper yesterday saying that, the tariffs could hurt or could raise the strength of the dollar.
I love David. I didn't think there was that much new there. The seventh inning, I did a piece about how, in Real Money, how we got to stop talking about innings because it was the seventh inning from Micron when it was the 59th, and now it's the fourth inning. I mean, you can't go back in time in innings. You can in stock prices.
Yeah, I mean, to your point, we're back to where we were on August 31st, two weeks ago in the broader markets.
Yeah, I mean, look, there are rotations. I call them roving bear and roving bull. The roving bear market in financials could end. Watch the financial tech companies come down if that's the case, because the money keeps flipping back and forth in algorithmic fashion.
Okay, and we'll talk about one of those companies, PayPal, in our ActionAlertsPlus.com call after this. Please join us there. Meanwhile, Jim, Adobe, one of your cloud kings, blowing away the numbers.
Yeah,
record revenue.
And once again, I mean, this was one where I felt determined during my mad dash when the stock was down to say, have you bothered to read the conference call? Have you actually looked at how strongly the company's doing? You nitpick and you talk about deferred revenue. This kind of nonsense has kept people out of the cloud kings over and over and over again. So I was determined this time to set people straight. Now, I'm sure midday the people who are worried about the deferred revenue will come right back and sell it. So I don't suggest anyone buy it up 6, but understand that the nitpickers and the cloud kings are always there. And then you take a look at where ServiceNow is or Workday and how they come back. And there's a couple other stocks that are like that I've been talking about, cloud princes. They tend to get nailed and then they regroup and then they go higher.
Yeah, one of those cloud princes, Coupa, you recommended in early June. Look at the performance since then.
Coupa's incredible, and it's a company that really helps you cut costs in terms of how much of supplies, how much you buy.
Okay, Jim, Real Money's stock of the day, of course, is Sears. You write in Real Money, rival retailers are taking share, but that share is going to decline.
Yeah, because there's so little to donate. I mean, one of the things that people don't realize is that you get a Sears or JCPenney and you see their sales go down, down, down. It's not like the sales don't happen, they just shift. And what do you see? You see Home Depot do well, you see Lowe's do well. There's a downgrade, Costco, let that come in and you can buy that. I think that Costco's doing quite well. It was a valuation downgrade, the highest valuation in 20 years. So that gets corrected by the stock coming down, and then you buy.
Yeah, just on Sears, same-store sales down 3.9%.
Well, that's considered to be better, but Sears is a moribund institution. And you cut it to, I mean, I'm sure there's some profitable Sears stores, and you just close all the non-profits, and you get somewhere, but that's an ongoing process.
Okay, Jim, today you're actually going to be interviewing the CEO of the Green Organic Dutchman at a conference.
So much on GOT. I mean, I've got a file. I mean, this thing is so interesting. I have to tell you, I spent a lot of time doing the weed stocks, and there was a piece in Politico talking about how the U.S. Border Patrol is basically going to, the Customs and Border Protection Agency is going to continue to apply long-standing U.S. federal laws and regulations to treat marijuana as a banned substance. So the idea is that when Canada lifts the ban, remember we're going to have Canopy at our conference 4 days before the repeal in Canada. When Canada lifts the ban, it looks like the interference from the Border Patrol is going to cut how much can come in here. The reason why this is our old friend Deborah Borchardt is running this conference, and TGOD, that's what they call it, TGOD, is natural and organic pot. And I think that, by the way, when you talk to younger people in Colorado or in California and Oregon, this is what they want. Natural organic. They've raised $300 billion, so they're well capitalized, and it's run by a guy from Procter & Gamble. Kind of interesting.
Okay, Jim, we look forward to hearing more about that.
you.
Who do you have coming up on Mad Money tonight?
I got Boot Barn and Stocks on Fire, Companies on Fire. Matthew Boss with the best research there from JP Morgan. And Broadridge, a new CEO. Broadridge is a consistent, they run almost all the proxies. When you get those things in the mail, that's a Broadridge. So it's a good company.
All right, Jim, we're going to keep talking about stocks in our ActionAlertsPlus.com video. And by the way, if you missed Jim's investor call yesterday, you can watch a replay by joining the club. You have to join the club.
Right, and it was an hour and 15 minutes, jam-packed, a lot of information about stocks, questions answered, and then I always like to have an educational segment. It was about spotting tops. I think you'd really like it.
Yeah, gives you a roadmap, certainly for the rest of the month until the next call. Jim, thank you so much.